Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of April the 15th, 2019. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index. Now, what I've done here for us this week is I've drawn some lines on the screen here to show people how to really use the VantagePoint software in both trending and non-trending markets. Now, again, the market, regardless of which market you're looking at, for the most part is only trending 20% of the time. So when we look at our Forex market, you can see that I've outlined in circles here with dates, and in most cases throughout the calendar year we can assess here that VantagePoint has forecasted the dollar index to go higher towards the end of each month and the first week of the new month. We can also assess here that VantagePoint also tells us that around the middle of the month the dollar index usually weakens around the 11th or 12th of the month, almost every single month. So this helps us in our analysis when we're looking at these things to assess whether the dollar is actually trending or whether it's actually just moving sideways based around supply and demand principles. So right now the dollar index is doing exactly that. It's very soft. We've got verified resistance sitting up at this 97.16 area, but we've also got relatively strong support coming in down at the VantagePoint T-cross long, which is 96.55. Based on what I've just shown you, based on the medium term crossing the long term predicted difference, we should expect further US dollar weakness for at least another 5 to 6 trading sessions, but I suspect by the latter part of this coming week that the dollar will start to strengthen again. When we look at our predicted RSI, we can see that we're moving between the 60 and the 40 line. Once again, most traders are not using the RSI properly. They're looking solely for overbought and oversold conditions. That is not the best way to use a momentum-based indicator. So essentially right now our momentum indicator is telling us the dollar is moving sideways with a slight negative aspect. When we look at gold going into next week, we can assess a very similar situation here. As the dollar, what is unusual, I will say though, is that the dollar index and gold are both moving down at the same time. Now, gold is in a very well-defined range, but a very important commodity to monitor in our Forex trading. Now, once again here, guys, we are just simply range trading. We are not trending up or down in gold. We are basically locked in a very strong range here between about 1270. Our lowest point here is coming down around 1280, and the upside of that particular range is about 1350. So in a classic case, we buy the bottom and we sell the top, knowing that the US dollar has limited gains ahead. The US will not be hiking anytime soon. Economy still looks okay to me, but it is slowing globally. So usually when the global economy slows, that's a decent time to pick up gold contracts via either the futures market or even gold stocks or ETFs. Now, with light sweet crude, we can see that crude, as it moves up, we've come up to a strong verified resistance area as identified in the software. That particular area now coming in at 64.71. We've been stuck up here for basically the entire previous week, and again, this is what we want to watch very closely. If I just zoom in on this a little bit, we can see very clearly that all of these bars are basically stacked up against each other. So if we can push through here, we need stocks moving higher for that to actually happen. Now, when we look at the S&P 500 this week, just a quick side note here that VantagePoint is now offering a stock program, and again, it's a stock club, and what the stock club will do right off the bat for you guys will give you 200 additional stocks. Then their VantagePoint team will cherry pick a group of stocks each week or each month and basically forward those off to you to kind of narrow the herd a little bit. We're talking about the stock market market has thousands and thousands of stocks. So VantagePoint is going to assist you guys by joining up with their stock club. So be sure to contact VantagePoint and ask them about that. Now, as we move into our main Forex pairs, once again here, guys, the Euro-US pair is the most heavily traded pair in the Forex market. What I've shown everybody here is basically cycles in the dollar index, when the dollar gets strong and when the dollar gets weak. So right now we're in a period of dollar weakness, as identified in the opening presentation here. When we look at the euro next week, 112.64 is the critical area. All of our indicators are absolutely rising here, but guys, this is more than likely a short to medium term move. We know that the dollar strengthens basically every month at the end of the month and the first week of the new month. So the euro is likely going to start very slowly moving towards the 114.46 area. But again, be prepared for adding additional shorts here. Eurozone recovering a little bit here, but I don't think enough to cause a complete trend reversal. And when we look at these verified zones, what the euro would really need here is a break above 116 to just take the pressure off the downside. But right now, the move higher in the euro, to be clear, is corrective in nature, but we want to play these cycles. You can see that basically the euro is starting to strengthen a little bit here towards sideways in the beginning of the month, and then it makes its move towards the middle of the month. And this happens just about every single month here, guys. And again, this is the beauty of the Forex market. It's far more predictable, in my respectful opinion, than any other market. And with currencies only moving 1% of their value per day, it's the least volatile market. Also, stocks moving 10% of their value just about every single day, sometimes as much as 20 or 30%. Very difficult to gauge that when we're talking about stop losses and things of that nature. Some good opportunity, however, in both of these markets. But just to point out, the predictability of the Forex market is I find very, very interesting. Now, with US Swiss franc, as the euro rises, in most cases, US Swiss franc will often again move lower, not higher. So this is something we want to watch right now. We have very strong resistance as identified in the software between essentially the 1.0012 level and this massive level that we have at 101.24. Every time we have come up to this area here, there's been a very, very good short opportunity. Now, right now, this week, again, as the euro rises, in most cases, the US Swiss franc goes lower. So we want to watch here for potential further dollar weakness and a reversal on this particular pair. One of the ways to do that is to use the VantagePoint long predicted moving average by itself, our blue line, and look for a breakdown and close below 1.0013. If we close below that area, and you can see that the market's been hugging this blue line pretty much every day for the last 2, 4, 6, 8, 10, about the last 12 trading sessions. So this particular move is likely getting a little bit tired. So we want to look for shorts in the latter part of this week, or excuse me, in the early part of this week, but then we should be thinking about potential longs towards the end of the week. So it's a tricky one with this particular pair, but monitor Euro US to get a gauge of that. Now, when we look at the Great Britain US dollar, once again, we're getting all tangled up here. Now, this is again, with the VantagePoint software, if we're able to identify key pivot areas in the software and then apply that using the market data, each day you can see there has been a short into this T cross long at 130.98. Now, not only is there a short here, there is potentially a good long forming. All we need is a sustained break of 130.98, but Brexit is a dark cloud over this pair. A very, very dark cloud, actually. But if we can break above 130.98, and again, be very cautious on Monday trading, focus more on Tuesday, but if we can break above that, pound dollar should be able to target back towards this 132 area. But again, still a tall order. You can see 4 days in a row we haven't been able to break through that. So what this represents is a short on every one of these particular days using that key vantage point pivot area with the additional indicators, our neural index, our predicted differences. But I will point out the predicted differences are warning us that there isn't a lot of downside here, guys. So be very, very cautious with shorts. In my respectful opinion, we are likely to break above 131 early in the week and then sell off towards the latter part of the week on dollar strength. Now, as we look at the dollar-yen pair, the dollar-yen pair is more specifically responding to the strong move in the equity markets. In my respectful opinion, the market's anticipating stronger earnings, and they better get it, because if they don't, then the S&P 500 is basically going to crash down pretty hard. Often these cases are buy the rumor, sell the fact anyway. So ultimately, the S&P 500, again, only in my respectful opinion, is on borrowed time here. As soon as if we make another new high for the year above 29.40, the sellers are camped out up there just waiting to get a premium entry. So if and when that happens, that would obviously send dollar yen tumbling. Right now, we are up against a significant resistance area at 112.12. You can see the high coming off this verified zone. Be very cautious with this particular pair. Once again, when we look at the periods when we've had a failure, it's usually been around, the end of the first week of the new month, or the third week of the current month. You can see back here on March the 20th we sold off. We sold off again here on March the 5th, but the dollar yen has been tangled up in this area for a considerable period of time. If we back out, even if we can break above the 112.12 area, guys, any move higher is likely going to be limited to the 113.71 area. So you want to focus, even if the dollar yen breaks higher, guys, there's still a very good short opportunity, knowing that those stocks are likely on borrowed time. Now, as we move into our US-Canadian pair, once again, the first thing we want to do in our trading here using our VantagePoint software is identify the current overall range. So we can do that using our verified zones. We've got 134.67 on the upside. The major level is down at 132, but we have a lot of very strong support, which I talked about in last week's weekly outlook, sitting down around this 132.96 area. We made a tiny little push below there and came down to 132.84, which is literally like 10 pips, guys, and then we shot up by essentially 130 pips. Very nice move. Unfortunately, the VantagePoint verified zones are sitting here waiting at between 134 and 134.67. So right now we're in a very tight range. If we want to sell this particular pair, guys, we need to look to our VantagePoint indicators. Right now we've got somewhat of a mixed bag here. When we bring it down into the monthly, so I can zoom in here, our neural index is saying we are heading lower. We're not able to close above the VantagePoint long predicted at 133.52. So we've closed at 133.22. So our pivot area for the week to start is 133.52. If we're staying below that area, shorts are on the table. But if we're closing above that area, then we want to get long. But here's a trick, guys. Always be very cautious on price action on US Canada on Monday. Usually whatever it does on Monday, it does the exact opposite on Tuesday. So keep that in mind if you're trading this pair. And again, be careful and watch your predicted differences and your neural index for the next move. Now, when we look at Aussie US and New Zealand US, our other two main commodity currencies, once again, you can see that Aussie US is using that critical T-cross long. Using our triple EMA cross, we get three main pivot areas. They're T-cross short, medium, and long. Right now, we've closed above all three of them. It does, at first glance, look quite bullish. However, when we look at these areas up here around this 72 area, 72.06 to be specific, This particular pair has not been able to get above this area and close above this area. Essentially, we would have to go to get a close above that area. We would actually have to go all the way back into the early part of February. So indisputably, Aussie US has been bearish on the year here, guys. So let's not forget the overall bigger trend. Now, if we can penetrate and break through 7206, we would then be able to come up to our next verified zone between 7247 and 7295. But right now, that appears to be a tall order. We know that the US dollar will likely strengthen towards the end of the month, which basically means that Aussie US is likely on borrowed time up here. So there is the possibility of a good short opportunity. Just know your levels, guys. That's what I say to my own direct clients. That's what I say in the live training room. And of course, in all the seminars in Tampa and elsewhere that I've done, I always stress here, know your targets, know your levels. If you know these areas, guys, trading is not that difficult, but we don't want to take a trade on what we saw on a website or what this guy said or that guy said. We want to study price. We want to study intermarket correlations and understand how they work. If we do that, we are one step ahead of our opponents, right? Remember, trading is a zero-sum game, regardless which market you're in. So we need to know where our order flow traders are going to be and where basically our indicator-based traders are sitting. Right now, I feel they're going to be watching these areas very closely. When we look at New Zealand has not enjoyed any of the kind of strength that the Aussie currency has. It's actually still quite bearish. However, as I discussed in last week's Forex Weekly Outlook, we have significant support sitting at 67, the 67 level, and we can assess here that the market on multiple occasions, at least 4 times, has used this verified support zone as an opportunity to buy. So the beauty of this is, guys, we can straddle an area like this. We can buy off 67 and then we can have a stop reverse ready to go down around 69.40, 69.50. So if it's a true breakdown below this area, we can try it on the long side, and if it fails, we immediately cut the long and then go short. This is a proven strategy, and you cover both sides of the fence here. So once again, we've got a relatively light docket next week, at least on the US side. I believe we have retail sales, but nothing major. So we're likely to see a lot of range trading, but I believe next week we're going to start getting some earnings. All eyes are going to be on the stock market if these stocks can make new highs, but if they can't make new highs, guys, remember that there is a number of different currencies that are going to be affected by that, and that is the primary basis of advanced intermarket technical analysis. So with that said, this is the Forex Weekly Outlook for the week of April the 15th, 2019.